If I'm going to be investing in property A or property B, it's going to be based on the quality of how hard my money will actually be working for me.
I know a lot of people don't like numbers. So if you do love numbers, you're in the right place. If you don't, you're also in the right place.
When you're speaking about ROI, we're basically saying that if I'm going to be investing 10 Rand, how hard would that 10 Rand be working for me? So if we can just ask, right, what comes to mind when you think return on investment or when you're thinking ROI? What comes to mind? What's the first thing that just pops up in your mind when you hear return on investment?
Cash flow.
Money, cash flows. When you're speaking about ROI, we're basically saying that if I'm going to be investing 10 Rand, how hard would that 10 Rand be working for me? So say for instance, if I have 10 Rand right now and I want to put it into an investment, how much am I actually going to be getting back? So if I'm putting in 10 Rand and I'm getting 1 Rand back, that basically means that I'm getting 10%.
And what I like about how we came about today, it's more of how can we remove emotions from property investing? So why are we saying that we need to remove emotions? We're having a chat during lunch. Well, the person bought an apartment. You're paying on a monthly basis. This means that after 20 years, you're done with it. And then now you need to buy the next one. After the next 20 years, you're done with it. So if I'm to ask you, how old are you right now? And should I ask? So I'm believing that we do not want that business model whereby I'll be taking this, whatever, whether it's apartment or house, and I'll be paying it for that 20 years only to buy the next after that. So hence we're saying that let's focus on the number side. And that's what we will be doing today. I know a lot of people don't like numbers. So if you do love numbers, you're in the right place. If you don't, you're also in the right place.
Okay, now let's look at the reasons why we need to really understand what ROI is. The first thing is to understand the quality of your investment. So we're saying that, is it the best place to have your money grow? So now if I'm saying that, is this the perfect place for my money to actually grow? I'm meaning that if I'm looking at different types of investments, right? Let's say we have Bank A and we also have Bank B. So now Bank A says that they're going to be giving you a return on investment, or they're saying they're going to give you an interest of 8%. And now we're looking at, or the other bank rather, they're saying that they're going to be giving you 11%. I mean, it's a no-brainer that you'd rather go with the 11%, right? So now that's the same thing that we want to take and put it into property, that if I'm going to be investing my money with a property, I need to look at the different properties that I can actually invest in. Then if I'm going to be investing in property A or property B, it's going to be based on the quality of how hard my money will actually be working for me.
Then I'll jump straight to breaking even, right? So in terms of breaking even, I want to do a practical example. Let's just say that we bought this property. So in terms of us buying it, we have to pay transfer cost, we have to put deposit. If anything does need to be fixed, that's also coming from our pocket. So if we put in, we went all in at 150,000, right? We went all in at 150,000. If I'm to break even, focusing on this slide over here. If I'm to break even, how much does this mean I need to make? 150,000, right? Let's come on, it's not accounting, it's not tax. I need to see you smiling, it's not tax. If I'm to break even, and then that means that I need to have received this money back. So now you find a case whereby your rental income is 7,500. And then you find that your expenses, I don't want to scare you guys. So I'll say, let's say our expenses are 7,000. So what does this mean? What does this mean? Income on a monthly basis, and then these are our expenses, operational cost. What does this mean? There we go, 500. What's the 500? Profit. What's the 500?
Yeah, it's the profit. Return on investment. Profit.
Profit.
I'm standing for profit. I'm saying profit.
What's the difference between profit and cash flow?
So cash flow positive.
Thank you. Cash flow positive. We're going to start saying profit once we've received all of this. So where a lot of people get it wrong, they'll pitch something to you. Already in your mind, this is profit. I'm winning. So let's go back and see how good of a deal is this. I know a lot of people in worse deals than this. So, calculators, guys. Whenever I speak, I need to say a calculator. It's a must. So if I'm going to say now a calculator, right? 150,000 divided by 500. What do you get?
300.
What's the 300 mean? What does this mean?
To break even.
It's going to take us 300. Can you please repeat that?
Is that how long it's going to take you to break even?
300 what? You're just saying 300, guys. You're not saying anything. You're not saying anything. 300 months. 300 months. Right? And no, it's not even worst case scenario. This is best case. I'm coming. So it's going to take us 300 months to accumulate this 150. Provided 300 months, and then let's convert it to years.
25 years.
25 years. If I'm to pitch such a deal to anyone and say that, would you go into this deal knowing that it's going to take you 25 years? I said best case scenario. The reason why I said best case scenario is that did we factor in if the tenant will leave, vacancy and void? Did we factor in if we still need to fix? You can't have a property for 25 years without fixing anything. So,
I mean, if you look at it, if you're having a return on investment of 25%, right, and you say 100 divided by 25.
yeah,
100 divided by 25.
100 divided by 25, yeah?
Yeah.
Okay.
You'd see that it would take you 4 years to get your money back.
There we go. This is the type of situation that you want to find yourself in.
Now, if it takes you 4 years to get your money back, this ultimately means that you have your money and the property is still giving you cash
Yeah.
on a monthly basis. Now, we can say that it's easy for us to actually invest in the next property. Or we could say that let's sell this property. I was about to go into something.
Okay, but can we...
How are we sitting on time? 2 minutes.
2
Can
minutes.
I just explain this in 2 minutes, right?
Can you please give me one?
Okay, I'll give you one.
Take one.
Okay, so when you're looking at property investing, what some property investors is that they work in doubles. So what do we mean by working in doubles? This basically means that if I'm putting in 100,000, after the investment, I want to get this 100,000 and get another 100,000, right? So what some people do is that takes this 100,000 and I'm getting a return on investment of 25%, right? So 100 divided by 25, I'm getting 4 years. So this ultimately means that I'm going to hold this property for the next 4 years and then try to see that if I do sell the property, will I get an additional 100,000? Now, once I'm out of that property, I know that I came out with 200,000. That's my 1 minute. If I can just also add on, get something that's called a Lightstone report. What Lightstone report does is that they give you how much the property is valued at. So if the property is valued at 800,000 and you are being sold at 900,000, you already know that you're overpaying for the property. Because looking at property 24, it's really hard to tell what the value of the property is.
Any other questions?
Not a question. I just also wanted to add that you can actually ask the agent for the Lightstone reports as well. Because if you extract it yourself, it's going to charge you. And I can't believe I'm an agent and I'm telling you guys this. But before we list it, we have the reports. We have several reports on how much it actually is. Yeah.
Okay, we spoke to another lady that's in this room and we told them to ask the agent for the Lightstone report. The agent laughed at her that why would she want a Lightstone report, and then they blocked them. So
That goes to show.
she asked us that, oh guys, why you're making me a joke? They laughed at me. So if they do laugh at you, you can actually purchase the report, but the most efficient one is to ask the agent.
Yeah, definitely.
Yeah.
For me, bro, it's a race. It's a race. Why I'm saying that, look at it this way. If you're earning 30,000 and then the one property that you have, you're getting 2,000. You need to be pushing to get to the 30s. Let's push as much until you get to that point whereby you know that you secured that thing. But otherwise, I'll say push, man. Because here's another thing, class, right? We're using right now. You're buying under your personal capacity. This is what I was discussing with the gent earlier on during lunch. We tend to forget something as property investors, that you're going to retire. Now, you're not already thinking that when I retire at 65, what if I'm still fresh and I still want to buy more properties? How are you going to buy it now? Because they're all registered under you. And number two, you don't have that pay slip anymore. So hence, we don't even tell people that quit your job, because we know that we're reliant on this. Use this pay slip as much. Understand the value of the pay slip, because I was even telling my mother that don't focus too much on retirement fund. Imagine getting 1 million on retirement fund, however, the money that you could have accumulated throughout growing up. So look at it in that way, that push now, so that by the time you get there, you're sorted.